Now, whilst the long-term holder MVRV is much better used as a kind of macro indicator, the short-term holder MVRV can actually be used on much smaller timeframes. So for this particular one, we've got this viewed on a hourly time frame. And what you'll see is that we've got on here different levels for short-term holders being at a 20% loss, a 40% loss, or a 20% profit, 40% profit, 60% profit. Now, what you'll see is we tend to find very, very similar levels of resistance throughout the market cycle. So what I'm going to do is just zoom in on the 2015 forwards, just so we can get two different market cycles in kind of modern history. And here you can really see quite clearly when MVRV finds during these kind of uptrending markets, you'll see that 20 and 40% profits typically provide a level of resistance. This is showing you that that hot ball of money reaches these kind of periods of time of being overheated, both at local market tops, but then it comes back down and retests its cost basis on the shorter time frame. Now, the important thing to know is that because this is the kind of the ball of money that's following price around, when you get periods when it actually dips below their cost basis, this means that it is heavily weighted by investors who bought the local top. So what you're seeing is that when you get these consistent bounces off this level, it's telling you that there's a bit of a buy the dip mentality in the space. Now, if we transition over to bear markets, we can see the exact opposite. These retests of profitability, once we get these major sell-offs and sentiment really turns over, these retests of break-even become points of opportunity for exit liquidity. Those who have bought the local low as price rallies are taking that opportunity to actually get out of their position. And those that have been waiting for anything close to their cost basis to just get their money back are also taking opportunity. So we can see that both in the 2022 market as well as in the 2018 market, this acted as a significant level of resistance. So MVRV is really a bit of a multi-weather tool. We can use it for a great many different dynamics. We can also see a massive bearish divergence in the 2021 bull market. Price made higher highs consistently, but we had a deterioration in the profitability. Even though price was higher, the short-term holders were in less and less profit because their cost basis was getting higher and increasingly top-heavy and thus very sensitive to any kind of sell-off. You will also see during the 2022 bear market, price continued to collapse, first down to 30,000, then down to 20,000, and then down to 15 when FTX blew up. But the profitability was actually starting to increase. We were getting a positive divergence during that late stage, telling us that even though price was lower, more coins had been reset to a lower cost basis, and you were seeing that capitulation, which means somebody else was accumulating. You're getting this kind of transfer of wealth from the speculators back towards the stronger hands. And remember, there's one very important nuance. Generally speaking, short-term holders reflect kind of the hot money that follows price. There is one exception to that, and that is near the bottom of a bear market. Because after you've seen all of this downside volatility, the short-term holders are those who recently acquired their coins. That's the right way to think about it. Short-term holders are those that recently acquired their coins. If you're recently acquiring at the market top, it's likely you're probably a little bit less experienced with markets. If, on the other hand, you're stepping in now market lows, you really have to have some serious conviction about this asset to be doing that. So in a very, very small period of time near the late stage bear market, we typically see that short-term holders actually represent some of the highest conviction holders that Bitcoin has. And that is what this positive divergence is actually telling us. Towards these late stage bears, we're getting an improving profit and loss profile. Even though price trades sideways, the profitability is improving. Lots of coins transferred to a lower cost basis makes it easier to hold.